Hello everyone, thanks again for stopping by our YouTube channel. Make sure you guys go ahead and hit that subscribe button below, and at the end of the video, if you did like it, give us a thumbs up. When you subscribe, you'll get notified to all the new content we have coming out just about a weekly, sometimes bi-weekly level. So today's video, we're going to be talking about long-term care, okay, and how people fund it. And my name is Jeff Tomas. I'm the co-founder and CEO of Ideal Retirement Solutions, and we're headquartered right in sunny Southwest Florida in Charlotte County. And we have another location in Lee County as well, and we have clients throughout the states. So to jump right into long-term care, there's a couple different ways to fund it if you have a long-term care event, okay, meaning that you can't do some of the daily activities of living. Bathing, transferring, things of that nature. And so there's one way to fund it is to pay out of pocket. All right, not always feasible for a lot of people because, I've seen home health care costs and facilities range for anywhere from $5,000 up to north of $18,000 a month. And so how do you fund it, right? And so you could stroke a check, what's called self-funding, and pay for it yourself. And if you've amassed such a massive pile of money that you could do that, I applaud you. I really do. That's great. That's not the majority of Americans. And there's another way to do it as well, is traditional long-term care insurance. All right, and that is basically you pay. And let's say, you don't use it, you live to 85, you die peacefully in your sleep. Well, in most cases, all that money you paid into it, it's gone. The insurance company keeps it. That's kind of how they fund their investments, right? Pooling it. So, and that causes heartburn for a lot of our clients that we work with. So typically we advise on another path. That being said, there are some really great older long-term care policies, right? You're grandfathered in, or maybe you had it at work and it was portable, so you took it with you. So please just don't get rid of it. Have it reviewed by a professional. All right, that's going to give you kind of the honest opinion. All right, so number one way to do it, you could self-fund it, stroke a check out of the bank or retirement accounts, whatever have you. Buy traditional long-term care insurance. Not always the best thing. However, there are those one-offs that people have really good plans. The third way is what we do, what we believe is an asset-based long-term care approach. It's using different funding vehicles out there where if you do need a long-term care benefit, it's there. And if you don't use it, the majority of the money or all of the money and plus some of the earnings can go to a beneficiary. I kind of like that approach because if you live to 85 years old, you die peacefully in your sleep, that means your estate gets more money. All right, and there's some really interesting ways to do it. There's life insurance hybrid long-term care plans. There's annuity long-term care plans. And so there's some interesting approaches that you could take if you want to say, hey, I want to carve out a piece of my portfolio to make sure in the event that myself or my spouse need long-term care funding, it's there. The hope is we don't need it. Right? But the majority of people watching this video, either you know someone that was in long-term care and the funding of it is extreme in some cases, or maybe your parents or your grandparents lived through it. So the thing is this, I'm prior military service, Army guy. I always expect the best, but I'm prepared for the worst. So this is today's video. If you want to go a little bit deeper, contact our office. You'll see the links below in the video. We do know that care planning for some of our clients is very high on their list of things they want to address. Some people, not so much. And hey, that's your right to pick and choose, right? So our clients, we listen with both ears and we go down the list of importance. We will take off longevity risk, market risk, long-term care risk, tax rate risk, and all the subset of risks that go along with retirement distribution planning. So I hope this video was helpful. Once again, I'm Jeff Tomas with Ideal Retirement Solutions. Please feel free to contact our office, subscribe to our channel, shoot us an email. Thank you so much, and we'll see you on the next video.